Okay, for this video, I wanted to cover the IRS Schedule B-1 that's included with the Form 1120-S tax return. So I've got a sample B-1 here, and then a slide that covers some of the rules and the fact pattern that we're going to look at. So the Schedule B-1 is used to report information on certain types of shareholders of an s-corp. Okay, so you have to include this if on the 1120-S you answer yes to the question in Schedule B, which asks, at any time during the year, did you have a shareholder in the corporation that was a disregarded entity, a trust, estate, or a nominee or similar person? Okay, so let's look at an example where this issue might arise. John creates an LLC, Fake Consulting Business LLC, which is a Delaware limited liability company. The LLC is owned 50% by John and 50% by another LLC called JS Investments. Okay, so there's two owners. Now, JS Investments LLC is a single member LLC that is a disregarded entity. Okay, and it's 100% owned by this individual here, Jane Smith, who is a U.S. citizen. Okay, now remember, for single member LLCs that are owned, so a 100% owned single member LLC is by default a disregarded entity. So it's transparent for tax purposes, which means you look to the ultimate owner for their tax classification. Okay, so Fake Consulting Business LLC files an s-corp election via 2553, and the election is approved. Now, this structure is permissible because the DRE is ultimately owned by a U.S. individual, right? And that's important because, if you're familiar with the rules, you might be looking at this saying, well, LLCs that are S-corps, you can only have basically natural persons in there or certain types of other entities. But this structure is okay because, again, it's a disregarded entity. So it doesn't violate these rules in 1361A. Which says that you can't have any shareholders that are not individuals, and again, this structure does not violate that condition because JS Investments LLC is a disregarded entity. So the structure is permissible, but it requires a little more work on the 1120-S, right? So you've got to include the Schedule B-1, and it's being required because ultimately, every K-1 has got to go to who the owner is, the legal owner. But the IRS wants to know, okay, who's on the other side of it? Who's the ultimate beneficial owner that's going to be recording the income and paying the tax? And so that's where we have the B-1 here. So B-1 is attached to the return. We've got the name of the company, EIN, and then just list out all the shareholders that would meet this condition. So in this case, this is the actual shareholder of record, right? JS Investments LLC. We enter the EIN for the entity, type of shareholder it is, right? In this case, it's a disregarded entity. And then in column D, they want to know who is the ultimate owner, right? So Jane Smith is the owner of JS Investments. That's her social security number. So the IRS can expect to see the income being reported on her tax return, even though the K-1 is going to be issued to JS Investments LLC, right? Because JS Investments LLC, as a disregarded entity, does not file its own tax return, right? The information is reported on the ultimate owner's return. Okay, so that covers it. Fairly straightforward. It's just one of those things where, take a close look at the structure, make sure that you're answering all the questions appropriately on the return. And if it warrants including a form like this, make sure you complete it, and that should keep the IRS happy. So thank you for watching. If you have any questions, leave me a comment below, and I look forward to seeing you again soon. Thank you.